All right, everyone. Welcome to the Story Trading VIP weekly meetup. Just a quick reminder, Story Trading is not an investment advisor. That goes for all of our guests as well. Investing in securities involves significant risk of loss. This event is being recorded. It's going to be provided to our VIP members for a period of about 7 days, and then we'll post this up on our YouTube channel thereafter and Spotify as well, actually. All right. So agenda, we'll do a macro discussion. I'll do a quick, very high-level overview of a couple of my thoughts, but then we'll spend the bulk of our time with Vince Capadia to go over his chart, since he was here last week and everyone loved him. And so I asked him to come back, and he graciously taken some time from vacation to be able to do that. And we'll get Chris Tarber on CLFD. He did do a mini presentation for us in one of our morning shows last week before earnings. Actually, a late morning special edition show before earnings. Earnings came out. It looks to be good. So he's going to give us an ER review of that. And then I'll give you some updates, some due diligence and Nugget updates on SEAC DRIO CFVI. I'm going to take some time to go over some new due diligence. If you've been in the rooms, you know most of it. But if you haven't had time to pay close attention, I'm going to give you some due diligence and Nugget updates. First on SEAC, SEAC. This is the merger arbitrage opportunity. I had a very long conversation with IR finally. It's been at times difficult to get in touch with them. So they gave me a lot of her time, asked every question I ever wanted to ask about it. So I got a good idea on the status of the merger with Triller and the risk reward. Let me give you an update on what that deal is about. They're merging with, it's a reverse merger with Triller, which is a competitor to TikTok. And you got two options in this reverse merger. You can keep the stock and then take that Triller stock, which I'm not going to do because that's priced at a $5 billion valuation. And in this market, I don't know, that's not what I want, but you have an option to be bought out. And the buyout would be in $2, 50 cents in cash, and $1.50 in notes payable over 1 year. So it sounds like awesome, right? You get $2 and the stock's at $1.09. What's going on? So you can see when the deal was announced, this overshot that morning, right? And quickly went back to about 2, which made sense for a couple weeks. And then it's been consistently going down. It's been going down because it's late, right? The deal hasn't closed yet. What's going on? So, you know, as the market's been going down and conditions are getting worse, I'm sure a lot of market participants, including myself, are thinking, well, is this deal at risk? Is, you know, that $5 billion valuation too high? Is something going to break up? What's going on here? So what I found out from investor relations is that this is in the step that it's in now is SEC approval of the S4. So they're waiting for that S4 effectiveness statement. They've already put an amendment out based on some SEC comments. So right now they're in the commenting period from the SEC. Going back and forth, and you may see another amendment, or I don't know how many amendments you're going to see, but eventually you're looking for that S4 effectiveness statement. And then as soon as that S4 effectiveness statement comes out, you have the shareholder vote, which is expected to pass, and then you get your $2. Again, 50 cents cash and $1.50 over a year. So really what I was trying to get at is there something, you know, because of market conditions, is this deal at risk of falling apart, something like that? And what I was able to ascertain is that it's not. That's not really what this is about. This is about the SEC just being behind and being a little bit slow. In terms of the commenting back and forth, it's usually about disclosure items, right? That there's certain financials that need to be disclosed that aren't disclosed yet, or certain risks that need to be disclosed in the S4 which aren't disclosed yet. That's usually what these comments are about. He wasn't able to tell me in this specific case, but he said, generally speaking, those are the comments from the SEC, and generally there's, you know, an opportunity to fix these issues. It's not that the SEC is just going to go out and block a deal in this case. So that felt very good to me. I think the biggest risk here is really what is the discount that the market's going to give this once the deal is closed, because 75% of this payout is over 1 year. So right now it's at $1.09. You know, I imagine once the SEC approves it and there's a vote, maybe it'll be closer to $1.60, $1.70. It's not going to be trading at $2 because you get the other $1.50 over 12 months, and there's a certain default risk. So this is even what IR was telling me. He said this is really the biggest risk, and the market has to price in what is the risk that Triller is not going to pay the other $1.50 over 12 months. And that's really what this story should be about. That's really where the math should come into. And, you know, I just think right now it's probably undervalued because most people are linking it to market conditions and linking it to the SEC, what's going on with the SEC timeline. Something smells, something seems to be off here. So I'm holding on to the SEAC. I've been selling this on pops every once in a while. You know, there's a bunch of news that comes out or a social media influencer starts talking about it and you get into the 130s. So I've been selling, reducing some position in the 130s on range if it gets there. But I have a nice core position. And I think in this market environment, this deal probably still looks like a good risk reward to me. So that's the story with SEAC. Dario Health, DRIO, a quick update on that. We had a VIP Zoom with the CEO of Dario Health last week, and 15 minutes later, we had Teladoc earnings, which were a disaster. And then subsequent to that, next early morning, we got a note from, or maybe it was even that night, I got a note from the CEO that he was also sending out to all the analysts in terms of their reaction to Teladoc. And you already had an analyst come out the next day supporting Dario, putting a $31 price target out there. And you can see the stock's all the way at $5. So the main purpose I brought the CEO of Dario Health in was to talk about their balance sheet and their need for cash and how they're going to go about avoiding a further dilution until they're cash flow profitable. That was what the whole discussion was about. And it was an excellent conversation. It's not going on YouTube. The recording is available for VIP members. You can find that link in the VIP room. But I think he answered, he's got a plan, right? They got money. They got backer and Sanofi backing them up. They seem to have access to non-dilutive capital, to some debt if they need it. And they're growing very fast. They're not seeing the same issues Teladoc has. And in fact, it seems like they may be taking some share from Teladoc in that space which they compete in. Teladoc, 75% of their business is telehealth. They don't compete in that space. They compete in the 25% of what Teladoc does, which is chronic health management. That's from the Livongo purchase they made. So it seems they may be taking business away because they are not having any problem at all signing up employers, signing up insurers. In fact, the national health insurer that Dario signed up should be announced very shortly because they're just about to start phase 2, and that's when they have permission to release the name of that insurer. Which is going to also be indicative that it's basically going to be a validation, an endorsement by that insurer that Dario's product is great. That's why they're able to pass phase 1 and go into phase 2. So basically, all of the issues that Teladoc is having doesn't seem like Dario's having. For a micro cap, there doesn't seem to be risk here. They have, like, in terms of cash, at least not immediate risk, they have like 90 million in cash. They have Sanofi probably backing them up as an equity partner at some point. They have access to debt if they need non-dilutive capital. So they seem to be in really, really good shape here. You can go judge for yourself. You can look at the analyst report. I think I shared it in one of the rooms, the one saying a $31 price target. There's probably opportunity here with risk assets being sold off, with Teladoc being sold off. You can see the stock here already gave up all of its COVID gains at $5, and I've actually been a buyer here. I added more shares the other day. So that's a story with Dario Health. CFVI, a quick update. This is maybe the only chart on my list that looks good. And when we look at the 4 pillars of story trading, fundamentals, catalyst, sentiment, and technicals, everything's really starting to come into review. I'll show you some Alexa web rankings in a second. We'll look at the chart, technicals, and as far as sentiment, let me touch on that first. Elon Musk, as you know, with this whole Twitter purchase, has brought greater awareness to kind of this free speech sector. But what's even more important acutely for the stock is Elon Musk has drawn attention to Truth Social in several posts. And Rumble really benefits from that. And that's going to show in the Alexa rankings I'm about to show you. But it benefits also from a sentiment point of view, right? That these businesses are likely on Elon Musk's radar. He's never tweeted about Rumble. I would not be surprised if he did tweet about Rumble. I wouldn't be surprised if post-merger, Twitter had some sort of relationship with Rumble. Who knows? Maybe Rumble's the vehicle of which Elon Musk starts competing with YouTube in the future, right? That's all the sentiment side. But when you look at I'll come back to this chart in a second. You look at these web rankings. I have another chart I didn't put up here, but in terms of their daily active usage, it's constantly hitting new highs as reported by the company. We get like monthly numbers from them, sometimes reported quarterly, sometimes monthly, but it's going up in an elevator staircase fashion to new records consistently. And the next updates we get for April, May, June, I think the trend is showing you here. And there's also some app ranking data, which is looking really good for April. Which I don't have printed here, but you see this big jump here, and this is directly because of the attention Elon Musk has brought to Truth Social, and because Truth Social finally went out of beta, and they opened up their wait list. And when did they do that? They did that right after announcing that they switched their servers to the Rumble servers, Rumble Cloud. So, Rumble has so many catalysts. It's in the news constantly lately, right? And I think that's why you're seeing this breakout. This is a weekly chart, but you can see the same thing in the daily chart, starting to break moving averages. There was a huge purchase end of day Friday in a terrible market with everything diving into the close. Someone bought several 100,000 shares in the last minute before the close here on CFVI. And I think this is serious money. I don't even think that was retail. Because there was no follow through in after hours. Looked like some sort of big money or institution or something stepping it up. So I think you're starting to get a perfect storm. The only thing that's not perfect is the macroeconomic background and the NASDAQ and everything else. But this is, I think, one of the best setups from a story trading 4-pillar perspective right now is Rumble CFVI. So, and soon we'll get the catalyst, hopefully, of that. What we're looking for SEAC, the S for effectiveness statement, and the vote to happen on that to consummate the merger. All right, quick update on KODK. I've been talking about this a long time. We're seeing job listings, not a long time, actually just a few weeks, but I've talked about it a lot over these few weeks. We see job listings coming out to continue to validate the thesis we've been talking about, why there's been a huge insider buy of 2.7 million shares, which you can see right here. That's a huge insider buy candle. But I do want to admit, and especially after seeing the behavior of the stock, unlike CFVI, which has diverged itself and is not really trading with the NASDAQ, so the company-specific catalysts here are very strong. But with KODK, you're not seeing that divergence. You did see it for like a day or two when the huge insider buying came. But all of this price action down to like a minute by minute level throughout the day is strongly linked to the NASDAQ, right? So the market has put KODK in this bucket of a consumer discretionary tech company. And I don't think you can fight that without a major catalyst from the company, which may happen. Earnings are in 2 weeks. The insider bought for a reason. But, on the other hand, when an insider is buying that many shares, it's going to look suspicious for them to go out and, have a major announcement so soon after that insider buy. We may have to wait some time. So I do want to admit there's a major macro risk here. If you're bearish the NASDAQ, which I am, right? So, I got myself into a little trouble here because I am overweight. So what I've done with my overweight shares, I'm aggressively selling covered calls on this to reduce my cost basis. I'm trying to pick my spots. Anytime there's a pop, I'm going out there selling weekly covered calls, reducing my cost basis on those overweight shares by about 10 cents a week. So that's been an excellent way to do that. So that's my review of KODK. And that's it. That's the update on all the 4 stocks. We are running late, but hey, for you those listening on YouTube or social media, make sure to follow us on YouTube, on Twitter, on on Spotify, but we're going to hang out. We're going to end the recording here, and I'll just take like a minute or two to see if there's any questions. Thanks for joining us.